Alright, we're back again. Now let's discuss about the audit evidence. What is the story about collection of audit evidences? Now let me tell you, I'm going to cover almost 4 standards here. I'll be talking about that piece of standard number 500. Let me first talk about standard number 500. Now what are the 2 very important characteristics of the term? What is audit evidence, guys? What is audit evidence? Audit evidence is any information. Audit evidence is any information collected by the auditor. Any information collected by the auditor in support of his conclusion. Any information collected by the auditor in support of his conclusion will be called audit evidence. And one of the 2 most important characteristics of audit evidence, the 2 key words that we are talking about here is about audit evidence should be sufficient. Audit evidence should be sufficient and audit evidence should be appropriate. What does sufficiency talk about? Sufficiency refers to the quantum of audit evidence, while appropriateness refers to the quality of audit evidence. So I hope you can collect all this basic stuff. It's not a real problem. The procedures you have seen, compliance and substantive. What is audit evidence? Quantum refers to sufficiency, while appropriateness is talking about quality. One of the most important paragraphs of standard number 500 which is possible to be asked in the exam is about reliability of audit evidence. Reliability of audit evidence. When do you consider that the audit evidence is reliable? I'm giving you 5 points at this juncture when audit evidences are called reliable. Point number 1, external evidences. I hope you know the picture of how does the evidences. Okay, let me quickly talk about that also. Types of audit evidences. Here we are talking about based on their nature and based on their source. So based on their nature, they are classified into visual, oral and written, whereas based on sources they are classified into internal and external. So keeping this in mind, so should I obtain visual evidence, should I obtain oral evidence or written or internal or external? We're going to look at the reliability aspects of the standard. So there is a paragraph in the standard which talks about the reliability aspects where you're talking about external evidence is more reliable. External evidence is more reliable than internal. External evidence is more reliable than internal. However, don't forget, if internal controls are effective, internal evidences are reliable. Evidence in documentary form, is reliable than visual or oral, right? So evidence in documentary form is reliable than visual or oral, obviously, because that is in the written form, and then external evidence is more reliable than internal. If internal controls are effective, then internal evidence are also reliable. It's not that only external is reliable. And then evidence obtained directly by the auditor. Evidence obtained directly by auditor is more reliable. And point number 5 is the most important point. Evidence in original form is more reliable. Evidence in original form is more reliable than photocopy, scanned or digitized document. Photocopy, scanned and digitized documents. So if you are having standard number 500 in front of you, you go to the reliability paragraph, you will be finding all these 5 points down there, right? Audit evidence is any information collected in support of the auditor's conclusions. Sufficiency and appropriateness are the 2 important characters, right? When talking about quantum, the other one talking about quality. Types are classified based on nature and sources, and of course this is the reliability stuff about the audit evidence. Moving up next is standard number 501, right? A quick bite on standard number 501 is about 3 selected items, right? 3 selected items. What are the 3 selected items that are discussed in standard number 501? One is about inventory, Inventory. 2. Litigations and claims. Litigations and claims. And 3 is about segment information. Now quickly everybody, you can tune to stand number 501, you can go to stand number 501. I don't intend to write the whole stuff, so let me work on it. You can listen to what I say and then also cross check in front of you as to have 501. Right, come to stand number 501 and look at the first paragraph. We are talking about inventories. Now there are two very important things in the beginning of the standard from inventory that you are looking at. One is the existence of the inventory and its condition. The existence of the inventory can be checked based on physical verification. Of course, you can also mark with the condition of the inventory, because we need to understand the condition, because we have a inventory valuation principle which is cost or NRV, whichever is lower. So if the condition is not that good, the NRV will obviously come down. So inventory, the two aspects that are supposed to be checked are what? Existence and condition. How do you do that? Is by conducting a physical verification. Now the bigger question at this point in time is, sir, what if I am not able to conduct the physical verification on the time when the management is conducting it? We can go for an observation, but it's not possible. Then what? Do it on an alternate date. You can conduct the physical verification on an alternate date. If the auditor's attendance at physical verification is impracticable, then possibly what you can do is to go ahead and do that on a different day. Right, and what you need to do is you got to figure out the word intervening transactions. Right, if you can see there in the standard, you would get a word called intervening transactions, and you might wish to underline that. What are intervening transactions? Transactions that happen between the date of the actual count that you are doing and the date of balance sheet. So probably 31st March you were not able to go there, you went there on the 5th of April. So from 1st of April to 5th of April, whatever intervening transactions have happened, you can adjust back, work back and get back to the stock on 31st March. That is one such appropriate way to obtain evidences on inventory. Then you're talking about litigations and claims. What are you doing in litigations and claims? You're talking about three things that you can do to understand litigations and claims. One is inquire the management, inquiry, which is asking how many litigations and claims are there. That's one of the most easiest ways to start off asking. Or you can refer to minutes of the meeting, and then you can also do one thing is to review the legal expenses account, right, review the legal expenses account. So inventory, we're talking about existence and condition of that. Litigations and claims, you ask the management as to how many are there, refer to the minutes, and you can check the legal expenses account to understand how many litigations and claims are there. And of course, if the management is giving you a list of litigations and claims and you want to be very certain about that, then all that you can do is to take a written representation saying that all known litigations and claims have been disclosed to the auditor. You can find that line in the standard there very clearly, that all known litigations and claims have been disclosed to the auditor. And then talking about segment information, whether the segment information is presented and disclosed, in accordance with the applicable FRF. Right, segment information as AS17. So whether everything is done and taken care of applicable FRF, that's all, that's the question. There is an applicable FRF which says how you present segment information, whether everything was presented according to that or not is the question. Right, so that's it about standard number 500 and 501 on audit evidence and 3 selected items on how you pick up the audit evidence. Let's in the same frame move to standard number 505, where we are talking about external confirmations. External confirmations. What are external confirmations? External confirmations are direct written responses. External confirmation is all about direct written responses from the third party. Direct written responses from the third party to the auditor in paper or electronic form, both are valid, paper or electronic form. So guys, please do understand that it's a direct written response from third party to the auditor in paper or electronic form. That's the whole idea of collecting a external confirmation. And possibly what are you supposed to do in terms of an external confirmation? How do you go about, right? There are 4 steps in doing the external confirmation here. What are the 4 steps that we are supposed to do? Determine the information you want to confirm. Determining the information to be confirmed. Selecting the appropriate third party. Selecting appropriate third party. Determining the information to be confirmed, selecting the appropriate third party, sending the request to the third party, and follow up. So these are the steps involved in doing the external confirmation. What you are supposed to do? You got to first figure out what information you want to take to the confirmation. Are you sending it to a debtor or a creditor, or maybe to a third party where the stock is lying at a third party? From wherever you want external confirmation, determine what information you want to confirm first. Then select the appropriate third party, right? Sending the request to them and follow up, right? So can you see all these 4 points being discussed in stand number 505? I hope everybody is on page with stand number 505. So direct written responses, and these are the steps in doing the external confirmation. Now let's look at what are the 2 types of external confirmation that we're talking about, right? What are the 2 types, guys? We're talking about a positive confirmation and we're talking about a negative confirmation, right? What is a positive confirmation? Where you're sending a confirmation where auditor is doing 2 things. 1, seeking information, where auditor is seeking information. That is, you are not telling them the balance. What you are doing is, you are just sending a letter. As part of the audit process, we want to know how much is the balance. You are not telling them and asking them to confirm. You are seeking information from the third party to tell him, tell how much is the balance. Or 2, you can tell the balance, right? You can simply tell, as part of the audit process of the X Limited, we have come across that you are one of the debtors of X Limited, right? And we note that your balance is 50,000. Kindly confirm the same. And you are expecting them to give a reply, whether it is 50 or not 50, where the auditor is seeking information or asking confirmation, asking for confirmation. Both these are called positive confirmation, and in this, remember, reply is expected both in case of agreement or disagreement. That's the point. So where auditor is seeking information or asking for confirmation, where reply is expected both in case of agreement or disagreement, which is what is positive confirmation. Looking at negative confirmation, in this case, remember, reply is expected only in case of disagreement. Now please understand, only in case of disagreement means you've sent and the balance seems to be 50, right? You asked it and you asked them, kindly confirm only in the event of disagreement. And when you talk about only in the event of disagreement, so if they haven't replied back to you within a specific time, it means you confirm that the balance is it. Understood? So that is about positive and negative confirmation. And guys, mind you, one of the most important questions that can come from the standard is about when can you send negative confirmations, right? There are 5 conditions to comply. Everybody, are you looking at the 5 conditions? So 5 conditions. What are the 5 conditions? Risk of misstatement is low. Item contains a small amount. Internal controls are effective. Low exception rate. That means the chance that something coming back is low. Low exception rate is expected. And point number 5, no reason to believe that third party will disregard your request. Third party will disregard your request. What do you mean by disregard the request? That means you ask for it and purposefully they are not giving. Such a situation won't arise. Now guys, not one, unless all these 5 conditions are complied, you will not be sending a negative confirmation, right? So that's it. That's what we have in stand number 505. So I think you have 3 standards in this frame. You can have a quick look at all the 3 standards, and then we'll move on to the next frame where we will talk about a few more 5 series standards. Alright guys, let's move on with the next set of 5 series standards. Let me continue. So we finished 500, 501 and 505. Moving on, I'm just willing to cover stand number 520 for you, which is on analytical review procedures. Analytical review procedures, which is very important again. There are 4 steps, very simple. Let me quickly explain you. What are analytical procedures? Analytical procedures is nothing but the study of ratios and trends, right? We have ratios and trends. At the same time, it is nothing but an evaluation. As I told you in the past, keep the book next to you where these standards are and revise with the standard very quickly. So what is the definition of analytical review procedures? Evaluation of financial information with both financial and non-financial data, financial and non-financial data. So all that you are doing in this standard is about taking a few numbers of the past and of the present and then comparing all that. If the current quarter performance is like this, what are the previous quarter, how was it, what is it happening, how did it work out? So all those are the comparisons that we will do. Now what you need to understand is financial to financial is not the only comparison that we are making. Sometimes we are making a comparison with financial to non-financial also. And what you also need to understand is the steps involved, right? Steps in doing analytical review procedures. There are 4 steps that you need to do here. Step number 1, what we are talking about is picking up a very suitable method for doing up. So if you look at the standard, there is a point on suitability of the procedure. That means select the right analytical procedure. Are you comparing the right thing with the right thing? Then in analytical procedures, what is more important is picking up the numbers, right? So if the source of the numbers are wrong, then all those calculations that you're doing will go wrong. So therefore, it's very important to understand the reliability of the data. From where did you get reliability of the data? Basically, I'm talking about the source in this particular situation. Then 3 is about developing an expectation. So based on your understanding of what it is, you develop an expectation. Develop an expectation. And the most important point at the end of the story is what expectation you have compared with the recorded values. Compare expected values with recorded values. Compare expected values with recorded values. So what exactly have we been doing in this case in analytical procedures is pick up the suitable method for performing the procedure, then gather the data from the right source, develop an expectation and compare the expected values with the set of recorded values. And as you do that, that exactly will provide you what the status of the ratio or the trends, basically how things have moved, right, from the past. Now what is more important of the standard is not doing these 4 steps. After doing these 4 steps, you developed an expectation and you compared expected versus recorded values. If the deviation is more, if the deviation between what you expected and what was recorded is more, then it's important for you to investigate into those matters. So if you look at the last paragraph of the standard in front of you, you will see a word called investigate. Wherever the variances have been high between what is expected and recorded, you will investigate into all those matters. So that's what we are supposed to do with stand number 520, guys, right? So after you finish the analytical procedures, wherever the variances are high, you will dwell deeper into that particular areas. Moving up next, I would like to cover standard number 530 for you. 530 is on audit sampling. 530 is on audit sampling. What about audit sampling? So if you're talking about audit sampling, verifying less than 100% of the items, verifying less than 100% of the items is what is called as audit sampling, right? So verifying less than 100% of the items is called audit sampling. Entire data is called population. the entire set of data is called population. Now before we move on, let's discuss about the two very important concepts in sampling, the types and the methods of doing sampling. So what are the types of sampling? So if you look at what are the types of sampling, they are classified into two. The first type of sampling is called as judgmental sampling. Judgmental sampling. Wherein judgmental sampling we are talking about based on auditor's experience. Auditor's experience. Right? And then on the other side we are talking about statistical sampling. Wherein statistical sampling we are talking about what is called as probability theory. Right? So yeah, that's what is audit sampling, verifying less than 100% of the items where the entire set of population is being talked about, and judgmental sampling and statistical sampling are what are the two types of sampling. Then moving up next with, let's discuss the methods of sampling. So if you talk about what are the methods of sampling, you have two classifications of the methods of sampling, which is called random sampling, and then the other one is called interval sampling, which is also called as systematic sampling. Systematic sampling. And in random sampling, right, random sampling, we have again classifications of simple random sampling, which is every item having an equal chance of selection. Then we have stratified random sampling. What is the process of stratification? So stratification is nothing but dividing heterogeneous population where the characteristics of the population are quite different. Maybe population is ranging from, let's say, 20 rupees to 5 lakhs. If the population is ranging from 20 rupees to 5 lakhs, and if you pick up randomly using simple random, you might get up only all thousands or only 10,000s or probably all high value items. So there's no equal kind of, picking up. There is an equal chance. So all low items may come or all high items may come. So what are you supposed to do here? Dividing heterogeneous population into sub-homogeneous groups. Sub-homogeneous groups. Dividing heterogeneous population into sub-homogeneous groups. That sub-homogeneous group is called a stratum. Right, with stratification we picked up the stratum, and from each stratum then we again do a simple random. Right, so basically what we're doing is, I think that's very simple. I hope you can understand. Let's focus more on the important part. So moving up next, simple random and stratified random. So you know, dividing heterogeneous to sub-homogeneous is making you strat. Then interval. So here we have two kinds again. Block sampling, which is a definite block of consecutive items. Now like say 151 to 200. Definite block of 50 items, something like that. And then we have cluster sampling, where in a cluster sampling what you're doing is dividing the entire population into clusters. Now like say you have 1000 transactions, all that I did is to divide 10 100, so 100 like that I have divided 10, and then probably I am selecting the 3rd, 6th and 9th. So you go by an interval there, so which is again what is called as cluster sampling. Select everything and then go for it. So simple random, stratified random, block sampling and cluster sampling. This is what is the idea behind sampling. So let me explain you one of the most important concepts in sampling, which is called as the sampling risk. So how do we understand the concept of sampling risk? Sampling risk means what, guys? Sampling risk is the risk that the auditor's opinion based on the sample versus the auditor's opinion based on the entire population. So I am now talking about sampling risk, and in this context of sampling risk we are talking about what? Auditor's opinion based on sample. Auditor's opinion based on sample may be different from auditor's opinion on population. So if you do the entire population audit, you will get to one conclusion, and then if you're doing a part of that which is a sample, then you might end up getting something else, which is what? Audit opinion based on sample may be different from the audit opinion on population. This is called sampling risk, and there are 4 elements to sampling risk. I would like to explain you with a quick example here. See, Sampling risk can either arise in compliance procedures or in substantive procedures. So here I am talking about the procedure. It could be compliance, and then I am also talking about substantive. Okay, let me talk about these two guys. So here what I am trying to understand is based on sample, right, and then I have the actuals as to what happened, right, and what is the risk that I did and what is the effect of the risk. Let's look at these points now, right. So guys, if you look at what procedures are we talking about, we are talking about compliance procedures. Now compliance procedures is nothing but test of controls, right. Compliance procedures are test of controls. I want everybody, this is a less understood topic. Again, a lot of people try to ignore this. Very simple concept, so focus more. So compliance is test of controls. Based on the sample, you have concluded that the controls are effective. So you picked up a sample set of things, and based on that you decided that the controls are effective, but actually they are not effective. So your sample has misled you. So based on this, now see, when you already decided that is effective, you will not do any more. You will conclude that they are amazing, which is called risk of over reliance. You are relying too much on a control that you are not supposed to rely so much. Risk of over reliance. And the effect of that is you might end up giving an erroneous audit opinion. Same way, the opposite of this can also happen. That is, based on the sample, you concluded that controls are not effective or not operating effectively, but actually they are effective. Now, the best part about this story is that you have under-relied. This is called under-reliance. Now, the best part about this story is, right, now that you know that it is not effective, you tend to do, you pick up an extra sample. That's what the sampling standard says. Whenever you see that the probability of mistake is higher, you end up looking at more evidences, right. So in that case, you will end up doing more audit work. So more audit work. But in this case, you might not go wrong, but you might do what? More audit work. The same story can happen in substantive procedures. Two things can happen here. What can happen? In case of substantive procedures, based on the sample, you concluded that material misstatement does not exist, right? A misstatement, you are talking about a misstatement, you are saying that it does not exist. Here we talked about controls, right? So you are talking about misstatements. You discussed it does not exist, but actually it exists. Maybe you picked up a different sample, you could have got to the idea that it existed, but since you didn't pick up that sample, you are kind of facing a situation it does not exist. And will you be doing more procedures? No, because you already decided it does not exist. This means that you have incorrectly accepted a sample. This is called risk of incorrect acceptance. This is called what? Risk of incorrect acceptance, which will again lead to erroneous audit opinion. Which will lead to what? Erroneous audit opinion. And then if you believe that substantive procedures, based on sample misstatement exist, but actually they don't exist. Now the moment you believe that misstatement exists, right, that means you rejected a sample. This is risk of incorrect rejection. And again, now that you know that, you kind of discard that it exists, you will extend the sample size. And when you extend the sample size, what happens? You will only end up doing more audit work, but at the end of the audit work, you will anyway know the reality. You get what I am saying? So that's exactly what. So the quantum of risk of over-reliance, risk of under-reliance, risk of incorrect acceptance, and risk of incorrect rejection, these four put together make up what is called as the sampling risk. So that's standard number 530 on sampling in this frame. So in the next frame, we will look at one more 5 series standard, that's about standard number 580 on written representations, and then we will move on to the quick understanding of 6 series and 7 series. Alright, let's look at the last part of standard number 580, which is the last standard that I am dealing in the 5 series. Standard number 580 is again a basic and very important standard at your level on written representations. Right? What do you mean by written representation? Written representation is a written statement. What is written representation? Written representation is a written statement provided by the management, to the auditor. Now the bigger question is, why are they providing this to you? There are two reasons to do this, right? A written representation is a written statement provided by the management to the auditor. One, to confirm certain matters, and two, in support of other audit evidences, Now all that you need to understand is, why are we taking a written representation? Because we have already done some audit procedures, gathered some audit evidences, but what you need to understand is that may not be sufficient or appropriate. So how do you make it sufficient or appropriate? Is by collecting a written representation. Now one of the most important points that I am going to tell you right now is that, which is a true or false question, which has appeared several times in the exam, is that, can written representation constitute to sufficient appropriate audit evidence? Please understand, written representations on their own, if you are sitting in front of the standard, like you have the standard in front of you, written representations on their own do not constitute to sufficient appropriate audit evidence. Guys, I've been emphasizing this point forever, that a lot of people believe that if we take written representation in a few areas, it is enough. No, it is not. The standard very clearly mentions that it is only to confirm certain matters, or probably, like in the past I was explaining about stand number 501. In stand number 501, we did talk about taking a written representation for what is called as litigations and claims, right? So in that context, litigations and claims, to confirm that all known litigations and claims have been discussed, we collected a determination like that. So to establish related party relationships, that all known related party relationships to the management have been disclosed to the auditor. To only confirm certain matters, you are supposed to do your procedures to figure out, like say checking the legal expenses account, pulling out the related party list. You do your work. After you do your work, you take this as a support. It will only complete on its own. It is not sufficient appropriate audit evidence. A written statement provided by management to the auditor to do these two things, and also understand that on their own they do not constitute to sufficient appropriate audit evidence. Now, two situations. Requested written representation. So you asked management to give you a written representation. You requested for a written representation, and there are two things that can happen in this point. Requested written representation provided, and requested written representation not provided. So guys, what is the situation if a requested written representation is provided? Now two things can happen at this point. A requested written representation has been provided, but there is doubt as to the reliability, but auditor doubts reliability of that, right? So if you are doubting the reliability of that, then how do you go further, right? Requested representation provided, but there is a doubt as to the reliability, or you requested for a representation but it is not at all provided. So in both these cases, is it as good as not having a written representation, which is implying that there is a lack of sufficient and appropriate audit evidence, right? In both these cases, guys, you requested them for a written representation, they didn't provide it, or a requested representation was provided but there are doubts on the reliability. You kind of somehow feel that the management is not honest or ethical in doing that. So I mean, ultimately in both those cases it leads to lack of sufficient appropriate audit evidence. So what is the ultimate conclusion that you are supposed to do? So there are only two options. What is that? One, now that you don't have the written representation, perform alternate procedures. At this juncture, you got to perform some alternate procedures, and if you are not able to perform the alternate procedures also, then consider the effect on audit opinion. And I hope by now you understand what audit opinion will we be giving here. In standard number 705, there are two blocks to talk about. One is a case where we will be talking about those cases where we have evidence, and the other case is where we don't have evidence. And I believe this is a classic case of an explanation to standard number 705 where there is lack of sufficient appropriate audit evidence. You requested for a representation, it was not provided. You requested for a representation, but it was provided but not reliable. In both these cases, it leads to a situation of not having sufficient appropriate audit evidence. Therefore, the effect on the audit opinion would be you might end up providing a qualified or a disclaimer in this case. So both these are the very important points, that one is that they provided but there is a doubt on the reliability, two they have not provided, and that could lead to you performing alternate procedures. If you are able to perform alternate procedures, well and good, but if you are not able to perform the alternate procedures, you might end up giving a qualified or disclaimer of the opinion. So that's it guys, that's the last 5 series standards. So discussed 500, 501, and then I have discussed 505 on external confirmations for you, 520 on analytical procedures, 530 on audit sampling, and 580 on written representation. That's the hell of 5 series. Alright, let's move on to the last wing before we go on to reporting. Is about a quick bite on documentation. What are we looking in documentation? Standard number 230 talks about documentation, and then we will move on to the 7 series. I will give you a quick bite again on 700, 705 and 706 to conclude. So in the next frame, let's come back and discuss on what is standard number 230 talking about on documentation, and then let's also wind up our discussion based on the 700, 705 and 706. Alright guys, let's look at standard number 230 now. I hope you are following on what we are doing. So let me have a quick relook of the things that we have already done. We have done standard number 210, that is on engagement of the auditor. We did standard number 315 on obtaining knowledge of the client business. Step number 3 we did audit planning, and then step number 4 we talked about compliance and substantive procedures. So now we talked about all the 5 series standards. Now is the time for you to do step number 6. If you have noted the 8 steps that I have written, we are at step number 6, which is on audit documentation. So like I told, standard number 230 deals with audit documentation. Standard number 230 deals with audit documentation. Now what is audit documentation? It is a record of, audit documentation is a record of the audit procedures performed. Audit documentation is nothing but the record of audit procedures performed. So if you are having standard number 230 in front of you, you might wish to look at the definition. It is nothing but the record of audit procedures performed. This is the basic definition of audit documentation. Why do you need to have documentation? The only important part of the standard is about answering the question on why documentation. Let me give you 2 plus 6. What is 2 plus 6 here? 2 points which are the basic reasons why you require audit documentation, plus I am going to give you 6 additional purposes. You can mark 2 stars to this particular point. This has been asked in the exam a couple of times. What are the additional purposes that the documentation serves? What are the 2 basic points that we are looking at? Why do you need documentation? Reason number 1 is what we are talking about. The audit documentation provides, a basis. Audit documentation provides a basis for the auditor's report or auditor's conclusion. Without this, he can't conclude. Obviously, the next step that we are going to look at is the 7 series on reporting. So before we do that, we need to have solid documentation, because it's the requirement of standard number 230, and the auditor should maintain documentation. And reason number 2, what is reason number 2? Guys, tomorrow, right? Today you will be able to comfortably tell what you did in the audit because it's very fresh in your memory. What about somebody is asking you 1 year later? And you're all students who are also studying income tax, a scrutiny can be picked up 2 years later or 3 years later, or all the books are reopened later. The auditor can be accused of not doing the audit properly at any point in time. Where is the difference? This exactly is the difference, my friends. Understand? So audit documentation is also a proof, or you can say it is nothing but the evidence of the audit being conducted. It's the evidence of the audit being conducted in accordance with, what did you conduct the audit in accordance with? All the standards, in accordance with all the standards on auditing and relevant regulations. Relevant what? Regulations. That's exactly the two reasons why you need to maintain the documentation, two of the most important reasons. Now, not just two guys, we have 6 additional purposes what the documentation serves. Point number 1, what are we talking about as the additional purpose, right? Now guys, documentation, does it help you in planning and performing the audit? Not only this, it helps you to do future stuff also, but I am not talking about future now. So it helps to plan and perform the audit. Now, let's say for instance, an article student has finished the audit and then he wants to go and explain it to his boss that he has finished that particular area. How do you think he would go and explain? So if I go and discuss that orally, what will my boss supervise? What will my boss review? So when I go there, I need to present him this documentation. The second additional purpose that the documentation serves is that it helps in, documentation helps in direction and supervision. Direction and supervision, so that your boss can see as to what work did you do and he can further probably talk about what, he can supervise your work and move it further. Moving up next is point number 3, where who has done the work. See, today I will remember who did the work, tomorrow I will remember, 6 months later, 1 year later, and probably the article student who has worked on it might leave the organization and go. So it's always important to have the name on the documentation, right? There are 3 points which are essentially mentioned. If you look at the guidelines, say prepared by, reviewed by, and finally checked by, all 3. So prepared by, checked by, and finally reviewed by, maybe prepared by the article student, checked by the audit manager, and finally approved by the audit partner. So a 3-layer checking goes on. So because if you're doing audits of listed companies, you can't just simply do something and then just go and give the report, right? So a 3-layer checking goes on, and the documentation is clearly having the name. So it is putting up the accountability. Who did what work is very clear. Documentation serves an additional purpose of fulfilling the accountability. And point number 4, this is again one of the most basic points that we need to understand, that you know, when you plan and perform or when it helps in supervision and accountability, it is only one part of the story. But what is point number 4 talking about? Point number 4 is talking about retaining record for future. It's a retention of all the work that you did, right? And there is a retention period which the standard is recommending. So, retaining records for future, right? So, these are the 4 basic points. And then point number 5 and 6 are kind of connected, guys. Right? Now, somebody has come to do a external review, like say for instance, a quality control auditor. You have standard on quality control number 1, SQC1, which mandates a quality control audit in case of a listed company. So what happens in this case is that once you finish the audit, the moment you finish the audit, your documentation is ready, the QC reviewer, the quality control reviewer comes up, he does the quality control check and then he approves, then only your final audit report goes in. So if he comes, and what is the basis on what he will say that the audit was planned and performed properly? Only the documentation. So for quality control aspects and for conduct of any external inspections, these the documentation serves as the basis. So guys, that's it. That's the major part of the standard that we are supposed to deal with. Why the 2 basic points and the 6 additional points. Let me also cover 2 more very important points in standard number 230, which is talking about the retention period. So guys, how long are you supposed to retain documentation, right? It's very clear, it is 7 years from the date of signing of the audit report, from the date of signing of the audit report. You have to retain for 7 years from the date of signing of the audit report. Now there is always a possibility that people may ask, saying that 7 years from the date of audit report is fine, but I am doing a group audit or a joint audit. In group audit or joint audit, how do you discuss what is the date? The last report. Now say generally in joint audits we issue one report collectively, but there is also a possibility that when there is a difference of opinion, auditors may issue different reports. Whenever the last report was issued in case of a group audit, from there you might want to count this 7 years. So 7 years from the date of audit report, you have to keep the audit documentation, and after that you can destroy probably. And documentation, one of the most important points is that you can keep it in paper or electronic form. There is no compulsion that you have to keep it only in paper form, paper or electronic. Only thing is you should make sure that the media is available even after that. Now guys, again a very common question at the IPCC level is that can you share the working papers, right? This all documentation also has a name called working papers. The bigger question is, Can auditor share his working papers? Can auditor share his working papers? Right? This is broken down into two situations right now. Can we share it to a third party? Alright guys, the answer is a strict and straight no. There's no second thought there. The answer is a no. There's no further discussion. You can never share your working papers to any third party because that breaches the rule of confidentiality in the beginning, what I explained. Right, and moving on to the other side, can we share the working papers with the client? Can you share the working papers to the client? Now the bigger question is that in this case the rule of confidentiality doesn't arise. So then what is the next best thing that we are supposed to talk about? But one of the most basic points that you need to understand is that working papers are the property, the only property that the auditor can accumulate, without using any wealth is your working papers. So working papers are the property of the auditor. Now the important point is this: he may, when I say he may, not shall, may is a choice. He may, the key words that you want to underline there are at his discretion. So it's absolutely at your discretion. If you want to share working papers with your client, you can do so. If you don't want to share, you don't need to. Right? There is a case study question in the practice manual which says that the client has emphasized or client has forced the auditor to share. You don't have to, because client doesn't have a right on your working papers. Working papers are the property of the auditor. He may at his discretion share a portion of or complete working papers. Right, a portion of or complete working papers. That's absolutely at his choice. Nobody can force him on that. Right, that's it on standard number 230. What is documentation? What is the retention period? And can we share our working papers? So that your step number 6 from where we started. So we are pending with the last piece. We are supposed to discuss on reporting, which I will be covering in the next frame. Alright guys, this is going to be the last frame that we're discussing about. This is about the audit reporting story. Right, so before I go to the audit reporting story, let me quickly have a relook on whatever we have done till now. We have done step number 1, that is standard number 210 on the terms of engagement. Then we discussed point number 2, which is about knowledge of client business. So to obtain the knowledge of client business, we discussed standard number 315. Then after this we discussed standard number 300 on audit planning. Right, as part of the audit planning, I did discuss 2 more standards with you, which is standard number 315 and standard number 330. So where we talked about risk assessment procedures, and we also talked about the responses to risk assessment procedures, which makes it in all 5 standards here. And then from there on we move to discuss standard number 500 on audit evidence, 501 on selected items, 505 on external confirmation. So this is on audit evidence, this is on selected items, 3 selected items we discussed. 505 is on external confirmations. Then we discussed 520 on analytical review procedures. We discussed 530 on audit sampling. And of course, I did discuss standard number 580 on written representations. Okay, so before and then of course we did finish this discussion with, so these are the 6 standards that we discussed, that makes it 11, and standard number 12 that we discussed is standard number 230, which is on audit documentation. So we're going to discuss 3 more standards, so that's almost going to make it 15 standards, which is 700, 705 and 706, all 3 on audit reporting. So before I go to audit reporting, let me also alert you at this juncture, we will be doing standard number 450, where we will compare between the aggregate value of misstatements on one hand with the audit materiality on the other hand, to see if the misstatement is material, and if you conclude that it is a material misstatement, you will communicate to the management. So let me quickly put that piece for you, and then I'll move on to 700. So I'm also covering your 16th standard there, the standard number 450, where we're talking about in standard number 450, if aggregate value of misstatements exceed materiality, if aggregate value of misstatements exceed materiality, what are you doing? That means it is classified to be a material misstatement. So auditor concludes that there is a material misstatement. Then what is the next step that you are doing? Communicate with management. Communicate with management or TCWG. What will you communicate with them? That there is a misstatement. Then there are two options. If management, what is if management doing? If management rectifies, and if management refuses to accept. There are two situations that are happening here. If management rectifies or if management refuses to accept. If management rectifies, very good. That means what? You perform additional audit procedures. If they refuse to accept, what will you do is to modify the audit opinion. Which we will be looking at in stand number 705. So that's a quick summary of stand number 450, which I believe should be dealt as a 13 standard here on 450, which is about evaluating the misstatements. How material are the misstatements? If you are able to evaluate, then you can evaluate. If they rectify, you can perform additional procedures and give a clean report. If they refuse to accept, the misstatement continues to exist, so you do modify the report as per 705. So let's look at the balance 3 standards to cover 16 standards down there in this. I hope that's a very good thing that we did, probably to have a quick understanding of almost 16 very important standards at your level in this video. Let's look at the last wing, guys. Now we are talking about audit reporting. What is audit reporting talking about? We're talking about standard number 700, standard number 705, and we're also talking about standard number 706. Okay, and like I always tell, so please have 700, 705, 706 in front of you to have a quick reference to what I am talking. What is being discussed in stand number 700 is about the audit opinion. Now when we are talking about audit opinion, there are two audit opinions that can happen. In stand number 700 we are discussing unmodified opinion, whereas there is also something called as modified opinion. But what you need to understand is audit opinion is broadly classified into these two. So unmodified is dealt in 700, whereas modified is dealt in 705. Let's quickly look at what an unmodified opinion is. Unmodified opinion is what? A situation where you are saying that the financial statement present a true and fair view. What? The financial statements are giving a true and fair view. That the auditor has sufficient appropriate audit evidence to say that the financial statements give a true and fair view. So immediately the question is, sir, what should I give in the audit report? Let me put up one of the most important questions at your level in the exam. What are the elements of the audit report? Right? 10 elements are there, starting with title, addressee, then introductory para. Guys, I want you to focus on the 5 points in introductory para. I am not writing it down there, I am just orally explaining. Concentrate. The 5 points down there in the introductory para are the name of the entity, the fact that they have conducted the audit, right? So I just want you to remember this paragraph that goes, we have audited the financial statements of ABC Limited Company, including their balance sheet, P&L and cash flow statement, read with the summary of accounting policies. So if you remember that paragraph, there are 5 points that you can catch up. We have audited, which means the fact that we have audited, name of the entity ABC Limited, for the year, that is date and period, and then the components of financial statements. You're making balance sheet, P&L and cash flow being talked about, and of course the summary of accounting policies. Mark it, guys, that's one of the questions that was asked in the past attempts, right? What are the contents of an introductory para? It's a very easy answer. Title, addressee, introductory para, then responsibility of management, responsibility of auditor. And then comes the most important paragraph called the audit opinion paragraph, right? Then you have other reporting responsibilities, date, place and signature. Guys, you can't miss even one of these. All 10 are pretty simple. That has been an 8 marks question in the past. You got to kind of explain all this. This is standard number 700, talking about issuing an unmodified opinion where the auditor has sufficient appropriate audit evidences to say that there are no material misstatements in the financial statements, where he gives a true and fair view in this. And the wordings are pretty clear that the financial statements of ABC represent a true and fair view. So he's going to give that very clearly. Moving up next, what gets complicated is a modified opinion, which moves to 705. Now the bigger question is, when do we issued modified reports, right? So moving this modified story here to 705, right? So audit opinion, second one is being modified. Now what are the two situations, guys? I'm going to call this as block 1 and block 2 for my reference. Block 1 are those cases where the auditor concludes that financial statements are not free from material misstatement. Financial statements are not free from material misstatement. What you need to understand is, whenever I use the word auditor concludes, the very word concludes says that he has appropriate audit evidences to say that. Right? When the auditor concludes that he has sufficient appropriate audit evidence, then what is the story? Then you have to check the effect of that, whether it is material but not pervasive. Pervasive means having effect, right? Material means that it affects the judgment, and if the judgment is also going to have an effect on that, then you're talking about pervasiveness. So it is material but not pervasive, material and pervasive. These are the two situations. So if an item is material but not pervasive and you conclude that they are not free from misstatement, you're going to give a qualified opinion in that case. And if you have sufficient evidence to say that it is both material and pervasive, you will be giving an adverse opinion in that case. And moving up next is the second situation where the auditor is unable to obtain sufficient and appropriate audit evidences. It's a classic case of the auditor having no evidence, and all that you can do here is to give a qualified opinion if it's material but not pervasive, and you will be giving a disclaimer of an opinion in case if it is material and pervasive. So whether or not you have evidence or you don't have evidence, if a misstatement is material but not pervasive, you will give a qualified opinion, and if you have evidence to say it is material and pervasive, you will go for an adverse, and if not, you will be giving a disclaimer. The wordings of the qualified opinion say what? Except for the effects. Now one of the most important point that you need to remember is, whenever you are giving a 705 modified report, there needs to be an additional paragraph that is to be introduced here, right here. What is that? A basis of modification paragraph. Basis of modification para. What is there in the basis of modification para? Why did you modify the report? The reasons will be stated there very clearly, and then the audit opinion will be modified. So what will be the wordings of a qualified report? Except for the effects of those matters which are stated in the basis paragraph, rest of the financial statements give a true and fair view. In case of an adverse, adverse is completely opposite. So if the unmodified opinion said it is absolutely true and fair, here the adverse wordings are quite straight and simple. Because of the significance of the matters mentioned in the basis of adverse para, the financial statements do not present a true and fair view, is what we are trying to say. And if you are also looking at the wordings of disclaimer, if you have it in front of them, you can again look back and then revise the wordings there, which says what? Again, in the basis of disclaimer para, you will, why are you disclaiming? And now always remember, you got to make 2 points in the wordings of disclaimer. You got to tell that you didn't have the audit evidence, and that is the reason why you are not explaining an opinion. See, you are not expressing an opinion not because you don't know what to do, it's because clearly that you don't have an audit evidence. So what is the wordings of disclaimer? Check that out, right? Because of the significance of matters mentioned in the basis of disclaimer para, the auditor is unable to obtain sufficient appropriate audit evidence, and thus, so and thus is very important there, because so you are emphasizing that you didn't get audit evidence, and thus the auditor is unable to express an opinion. So I hope you're clear with qualified, adverse and disclaimer and the basis paragraph, and of course the wordings of all that, right? Looking at the last string of our discussion is standard number 706, which is talking about two very important matters, EOM and OM paragraphs, right? These paragraphs are inserted after the audit opinion here. If there is EOM, you will give EOM first. and OM next. What is EOM and OM? So if you have 706 in front of you, please look into the definitions. EOM is what? Emphasis of a matter paragraph. EOM are those matters which the auditor believes that merits the attention of the user, and these matters are already available in the financial statement. If a matter has already been presented in the financial statements which is of sufficient importance that it merits the attention of the user, then the auditor has to introduce an EOM para. Now like say for instance the company has already stated about its contingent liabilities in the notes, but you as an auditor want to throw more light on that contingent liabilities, so that again will be put into the EOM. So examples of matters that come in the EOM are contingent liabilities, right, going concern issues. So these are all stuff that again go with it, right. And then coming up with the other matters, right. What are the other matters? Other matters are where the auditor believes that it is fundamental for the user's understanding of the auditor's report. That we talked about in EOM, where matters are already there in the financial statement. This time those matters which are not there in the financial statements. See, there are some of the matters that won't be there in the financial statement, like say for example in the previous year there was a predecessor auditor. I didn't do the audit, somebody else did the audit. Where will you tell this? This hasn't been told anywhere, but it is very important for somebody reading your financial statements to know that the previous audit was conducted by somebody else and this year you took it up. Where will you tell all this? Or there is another situation, you are giving a audit report on consolidated financial statements where the subsidiary auditor was somebody else. You didn't audit the subsidiary, somebody else has audited. How will the reader of a consolidated financial statement know whether you audited the subsidiary or not? So these are kind of matters which are very important for the user's attention, but they are not found anywhere in the financial statement. That is the reason you will give a other matters paragraph. What are the examples of other matters paragraph? These are matters that are important for the user to know which are not there in the financial statement, like audit of previous year was done by predecessor auditor, subsidiary audited by another auditor. So these are the points that we present in the other matters paragraph. Of course, there are so many more examples that we can talk about. So EOM and OM are the 2 points of 706. We are talking about matters that are already presented in the financial statement but which require a merit and attention. Then you will be putting up the EOM paragraph, and matters that are not available in financial statement but are fundamental for the user's understanding of audit report, you will be putting them in the OM paragraph. Let me move aside so you can have a complete look of the frame, right, which is exactly what we discussed in whole of this session, guys. So that is about standard number 706 on emphasis of matter and other matters. So we have 700, 705 and 706 on the reporting aspects. So I'm really glad that we could cover almost 16 standards which are pretty much important at the level of IPCC, right. So I hope this video was really helpful for you in understanding, like I could cover in the shortest possible time whatever I could cover I did. I do understand that this might be I mean, of course some people may rate it this to be fast, but this is exactly what kind of control and command you have to have. See, to be precise, I have not used a book in the entire audio. Is just because I revise it so many number of times, and my revision is basically because of my teaching. So I teach so many times, so I remember. The same applies with you. The more you read, the more you remember. So watch the video as many times as possible before your exams so that you have a complete understanding of that. And of course, follow our page tuition.in, the channel, so you have more updates on that. And if you are feeling good about this video, share it with your friends, and of course do subscribe to our channel. I wish you all the best for your exams. Thank you. This is CA Harish Krishnan from Hyderabad, and this is thanks to the premises. This is from Gyan Academy, Hyderabad. Thank you so much, guys.